Hello everyone, my name is Simanto. My ID is 138. Today I'll be present the overview of Bangladesh monetary policy covering the topics inflation, growth rate and financial stability of Bangladesh as well as the Bangladesh monetary policy's latest update. Monetary policy is a framework which through Bangladesh Bank try to control the money supply, interest rate and inflation to achieve its economic growth. This policy tried to achieve sustainable economic growth, maintain price stability and control inflation. Currently in Bangladesh, inflation rate is 9%. But Bangladesh Bank set an target of inflation is 6.5%. Those indicator reflects the balanced approach to maintaining sustainability while encouraging the growth. In this monetary policy, the main goals are economic control, economic growth support, and financial stability. To achieve those goals, key measures are taken by Bangladesh Bank is exchange rate adjustment, market based interest rate, and liquidity management. That's why Bangladesh Bank focus on agriculture, SMEs, and critical industries. By focusing on SMEs, agriculture, export industries, and digitalization, Bangladesh Bank create a contractual environment for employment growth while promoting the sustainable economic growth. Now, let's look at the different tools of Bangladesh Bank uses to manage the economy. Number 1, interest rate tools. This includes adjusting the repo rate and the other interest rate to control how much money is available in the economy. Number 2, open market operation. Those are the regular auctions where Bangladesh Bank buy or sell securities to manage liquidity. Number 3, exchange rate management. The central bank uses a system called chewing peg and sometimes interval directly to keep the currency stable. Number 4, liquidity support facility. This is short term funding provided to banks, especially during times of tight cash flow and helping maintaining stability. Number 5, digital payment of financial inclusion. Bangladesh Bank promotes digital payment and mobile banking to make financial services accessible to more people. Number 6, risk management and non performing loan management. Tools like alternative dispute resolution and asset management companies help banks to manage bad loans. Cash margin requirement on imports. Bangladesh Bank has reduced cash margin for imports to support trade. Number 8, refining and targeted credit program. Special funds are available for key sector to help them grow and contribute to the economy. Those tools work together to balance inflation, currency stability, and economic growth. Let's see a chart of significant changes compared to last year to understand properly. Let's look at some of the key changes in Bangladesh monetary policy this year compared to last year. 1. Repo rate. The main interest rate went up around 6% last year to 8.5% this year, which means the central bank is charging more for the loans to control inflation. Number 2. Call money rate. This rate, which banks used to borrow from each other, rose from 6.06% to 9.08%, a 50% increase. This means borrowing between banks is more expensive. Number 3, exchange rate. The Bangladeshi taka has lost its value against the dollar, going from 110 BDT per dollar to 117 BDT per dollar, and 8.17% drop. Number 4, foreign reserve. Our foreign currency reserve fell by 12%, dropping from $24.75 billion to $21.78 billion. Number 5, private sector credit growth. The target growth for loans to businesses is now 10%, slightly lower than last year, and the actual growth was close at 9.8%. Number 6, broad money or M2 growth. The total amount of money in the economy is said to grow around 9%, similar to last year. The actual growth is about 8%. Now let's see some tools which Bangladesh Bank need to reform. Number 1, flexible interest rate targeting. Number 2, exchange rate policy reform. Number 3, strengthen the inflation targeting framework. Number 4, refine open market operations. Number 5, macro potential policy framework. Number 6, digital currency and payment system. Number 7, developing a yield curve for government securities. Number 8, transparency and communicating enhancement. Thank you for your attention. Ask me any question if you want.